Hi, this is Alisha Lalljee, and it is my honor to introduce to you Mr. Sandeep Bagla. Sandeep is the CEO of Trust AMC. He has 3 decades worth of experience in financial services and fund management in India. Sandeep is an economics and management graduate, has worked as CIO fixed income for multiple mutual funds in the past. Welcome, Sandeep.
Thank you.
To kick things off, my first question to you is, how do you see the current state of the Indian economy?
So, Alisha, the current state of the Indian economy is not at its best. However, there are multiple drivers which have held the economy in good stead, and RBI has reduced rates and increased liquidity. So, we are expecting that in 6 months' time, the economy could be firing on all cylinders. There has been a great amount of capital expenditure which has been spent by the government, and the rural economy is doing somewhat better. We are expecting to have good monsoons. The macroeconomic situation is actually in great shape. Inflation is down, and things are looking to pick up. So that's where we are.
Okay. Do you think the present geopolitical situation can pose as a probable risk?
Yes, it can. I think the risks have been building up in a geopolitical situation with wars happening in the Middle East, in Russia, Ukraine, and even domestically we have seen some amount of uncertainty with India-Pakistan border flaring up. However, the Indian economy is fairly strong and insulated. So while these could lead to some factors like the crude prices going up or the commodity prices going up, demand could slow down from the external front. It could also impact the FII flows, which have been fairly uncertain in the recent past. But I think as far as the Indian economy is concerned, we are very strong, and most investors that are looking to invest in India are betting on the Indian growth story over a 3 to 5 year period. I think at the small incidents globally can lead to some amount of slowdown in the economy, but over a long period of time, I think we will do quite well because we have a very strong domestic diversified economy which very few countries offer.
What do you think of the role of the central banks in today's evolving macro landscape? What do you think of it?
Well, central banks, globally have been called to act as, to spur the growth and to boost the economy in the last few years. And earlier their role was more of a risk manager and inflation controller. But of late we have seen that they have been printing a lot of money to support growth so that the real economy also does well. The risk is that inflation might go out of control, which can reduce the ability of central banks, especially we have seen in Japan, in USA, that could be a clear and present danger. But in India, things are much better. Our economy is running at between 6 to 7%. Our inflation has been lower, heading lower, and is guided, stated to go down even further to maybe 2.5%. We have moved from a very high inflation zone in the past to a fairly low and controlled inflation, which allows the central bank to print more money, to relax the interest rates. When interest rates come down, it spurs investments, it spurs consumption, and that augurs well for the economy. So while there have been cases where central banks have done a bit too much and they may have to withdraw, especially in the Western countries, I think in India, the central bank has played a very important role. Another very important role that they have played is that of macro stability. So the macros have been very, very stable, and in stable times, it is then when the enterprise actually blossoms, and that is the time when the growth can actually pick up. So I think the macroeconomic situation is quite good. The central bank has indicated that they have done most of what they could have done to reduce rates and ease the monetary conditions. Now the ball is in the court of the private sector, and we are hoping that the economy will soon pick up and we will continue to grow at a fast clip.
Since you spoke about inflation, my next question to you is, do you think we're entering into a more stable kind of a regime right now?
See, the current regime has been quite proactive in terms of protecting the consumers from inflation. They have been quite fast to react to any global changes in supply, and even when oil prices went up, they have been able to procure oil at a fairly cheaper rates from different suppliers globally. So I think the government is very attuned to the fact that high inflation is not good for the economy, and I think we are in a low inflation. I think that globally there could be dangers because commodity prices have been going up. However, it is not a clear and present danger for us. So it's a good time for India to tighten its belts and at the same time grow and invest in capacities and spur both consumption and investment demand. So I think inflation for right now, I think is well controlled, well behaved, and I think it's likely to remain low for at least next few months.
So, in your experience, would it be fair to say that this would be a long-term pattern as of now? Do you think this is something which you see?
I am a little skeptical. I am an economic student by design, and I have worked in fixed income markets. We are slightly skeptical. Whenever things are calm, you have to. It's a good time to prepare for a bad time. So I would not say that this is a time to take your eye off the ball. I think we should be careful, and we should be careful about potential inflationary threats in the future. But I think we have moved structurally from a very high inflation regime to a low inflation regime. But we should still be careful because high inflation is not good for growth.
I think that's very well answered. My next question to you is, how do you see the RBI's recent policy moves? What do you think of it?
So RBI has, upfronted its policy moves. They have reduced rates. In fact, in the last policy, nobody was expecting seriously that they will cut by 50 basis points. They cut interest rates by 50 basis points, and however, what they said was they are moving their stance from accommodative to neutral, which sort of indicated that unless the data weakens substantially in the future days, they will not be cutting rates soon, which has led to a slight amount of hardening in interest rates. It's not very concerning. I think for the next few days, for the next few months, interest rates are likely to be low. They might be volatile in a small range, but at the lower end, which should spur demand both from the consumer in terms of consumer loans or housing loans, and also on the investment side from corporates, which could mean setting up of plants or borrowing more. India as a country has sort of deleveraged. So fiscally, India as a country has been quite responsible. Corporates also have deleveraged. So there is a lot of room to lever more, to take more debt. So I think good interest rates, lower interest rates are good for the economy.
And would you say that they're balancing growth and inflation effectively right now?
I think RBI is doing a phenomenal job. RBI has cut rates. RBI is now looking more at macroeconomic stability. The currency, the Indian rupee, has been very well behaved, trading in a range. I think growth is also stated to grow at 6.5% for the next fiscal year. I think we are growing. India is growing faster than any other large economy, and we are also, what is important is the longevity of growth. India is a country which is likely to grow faster for a long period of time compared to the other countries. So I think that holds us in a very good stead, and that is what makes us bullish on Indian stock markets and Indian economy.
My next question to you is, in what seems to be a decade of war, combined with tariff-related uncertainties, what is your view of the Indian markets right now?
So if you look at the Indian markets, markets don't like uncertainty. So, Indian markets have been fairly resolute. They have withstood various kind of shocks, external shocks in terms of wars, in terms of possibility of high tariffs. And the Indian economy has displayed that it is quite strong, it is quite mature, it is well diversified. However, one should take a longer term view when you are investing in equities, and one should spread your investments across time periods so that if the market were to correct, uh, you should be able to invest more. Also, one aspect which is not appreciated is the liquidity and the volatility. So only that amount of money should be invested in the market which you are sure that you are not going to need for the next 5 to 7 years. So that even if there is interim volatility, you are not forced to take out the money at a lower level. You should use the lower level to invest more. And that is why, my suggestion would be that invest with a long term view. The India structural growth story is very strong. There will be times when markets might come down because of external factors, but the local factors will spruce up the economy, and you will gain if you remain invested with quality fund managers for the next 5 to 7 years.
So in your opinion, would it be fair to say, say that the Indian markets are resilient? Would it be fair to say that?
I think Indian markets are very resilient, especially compared to other global economies. We have seen in the past that the number of listed companies has gone up. We look at the scenario where we look at companies which are more than 2000 crores in market caps. In the last 5 years, that number has exploded. It has gone up significantly, thereby allowing us to invest in companies which are experiencing high growth. Uh, I think a lot of new sectors are opening up. They are becoming larger.
Right.
The companies are getting listed. And last year there were more than 250 IPOs. That means new companies got listed. So I think it augurs very well for the domestic markets. And I think any global volatility should be viewed as a short-term aberration and not a stop to the long-term growth of India.
You're on the AMFI board, Mr. Sandeep. So can you tell me what are the key priorities the association is working on right now to shape the mutual fund industry?
So AMFI is a non-profit organization.
Okay.
All the mutual funds are part of AMFI. We are now aiming for AMFI 2.0. We have identified 4 key stakeholders: the regulator SEBI, the mutual fund, the AMCs, the investors and the distributors. So we are trying to gather more information. The industry has grown a lot in the last 10 years. We are trying to get better information to all the stakeholders so that they can take better decisions. We are trying to also emerge as thought leaders and investing money in developing data and knowledge sharing. So we will see a lot more development work which will come into the fore in the next few days with AMFI 2.0.
The AMFI PwC 2047 paper envisions a bold future during the Amrit Kal. What part of that long-term vision excites or challenges you the most?
So what challenges us the most is, as you expand fast, there are times when there will be certain players who might not obey all the rules, might not interpret all the rules correctly. So at AMFI, we are trying to ensure that our partners are mindful of all the rules that have been put to safeguard the interest of the small investor. And what is most exciting is the way the Indian economy is shaping up. Most investors have understood that if they remain invested with mutual funds for a long period of time, they stand to gain. So there are a lot of new investors which are coming in. So we want to make sure that their experience is smooth, their experience is is good, and they will stay invested for a long period of time.
One of the biggest trends in India is the financialization of savings. How do you see this transforming the investor landscape in the next 5 to 10 years?
See, Alisha, you would have realized that in the past, the stock markets were not so reliable. There were times when stock exchanges would default, companies would disappear overnight. So most investors used to feel that it's safer to invest in real estate or gold or maybe fixed deposits. In the last 10-15 years, we have seen the landscape change. Our payment mechanisms are better than anywhere else in the world. Our stock exchanges, margining system, trading mechanisms are really strong. The companies that are coming and getting listed are seeing a vetting process which makes them fairly reliable. So the Indian investor has realized that it's better to save in or invest rather than save in the equity markets and be a part of the structural growth story which India is experiencing. We see at Trust Mutual Fund, we see that for the next 20 years, more than 20% of the global working population will come from India. As more and more people find meaningful employment, they will earn more, they will save more, they will invest more, they will travel, they will consume. The companies that we are seeing today, they will grow in scale. Their stock prices will also go up, their market capitalization will also go up. New sectors will open up, new companies will get listed. The benefit of that can be generated for the normal layman by investing through mutual funds, by participating in the equity markets. I think this whole chain of events has led to a very strong flows into Indian equity markets. Now currently we are seeing on a monthly basis the SIP flow from retail investors close to 26,000 crores, 27,000 crores. I think this will continue to grow in the future also. The bulky flows might come and go, but this is the true barometer to judge the retail participation in Indian stock markets.
Do you also feel in that case there's going to be a lot of new first time investors that are going to actively begin to participate?
You have hit the nail right on the head, Alisha. There have been a lot of new investors coming. I mean, there are now online platforms, there are distributors. Lot of investors are coming first time, they are opening their demat accounts, they are opening their broking accounts, and they are investing through mutual funds. What we need to do is, have proper information flow so that the experience of the new investors is smooth and it is well informed. We want to ensure that people are not shaken by the volatility of the short term, but understand properly the benefits of staying invested for a long period of time. That is where the money is made. That is where you generate wealth and you do not focus at the short term. So I think this is what, at Trust Mutual Fund we are trying. At AMFI also we are trying to explain to people that how the benefits of the long-term investing will accrue to you only if you remain invested.
That's, I think, a very elaborate yet crisp way in which you have explained it. Let me ask you about your journey. So let's talk about Trust Mutual Fund, and how has your journey been so far, and what does the next phase of growth look like to you?
At Trust Group, we were mostly institutional players. Most of the senior management at Trust Group, Utpal Seth, Nipa Seth, me, Sandeep Bagla, Mihir Vora, we have all been, we had the investment background. We did not really understand the power of retail so far. But we have just launched 2 funds, equity funds so far. Okay. The TRUSTMF Flexi Cap Fund, which has completed 1 year. The TRUSTMF Small Cap Fund, which has completed 6 months. And I'm really happy that we have now crossed 1,000 crores, 1,100 crores in both these funds. So the response from the retail investor has been better than what we expected. Now we are in the path to introduce more funds. So right now we are going to introduce the TRUSTMF Multi-Cap Fund, which will make sure that investors can have investments, they can get diversification through discipline. The Multi-Cap Fund will invest in small caps, large caps and mid caps, at least 25% of its assets at all points of time. So we are coming out with, meaningful, differentiated products which will help our investors go a far way in their investment journey. So our journey, we have been extremely blessed to have distributors join us, to have long-term investors join us, and our performance has been encouraging as well. And we are very happy that we'll be expanding quite rapidly in the near future.
Can you tell us a little more about the multi-cap fund?
So multi-cap is a category which is becoming very popular in recent days. लास्ट मंथ हमने देखा था कि करीब 19,000 करोड़ का पैसा मार्केट में आया था एंड मोस्ट कैटेगरीज जो हैं स्मॉल कैप, लार्ज कैप, मिड कैप, इनमें जो अप्रैल के तुलना में मई में थोड़ा कम पैसा आया था. केवल एक कैटेगरी थी जिसमें ज़्यादा पैसा आया था. मल्टी कैप में 2,500 करोड़ की कंपैरिजन में 3,000 करोड़ आया था मई में. ये कैटेगरी ग्रो कर रही है. लोगों को समझ में आ रहा है कि दिस इज़ discipline and diversification in one fund. It's a one fund solution for a lot of investors. आपको तीनों स्मॉल कैप, मिड कैप और लार्ज कैप तीनों का एक्सपोजर मिलता है मिनिमम 25%. तो फ्लेक्सी कैप में या स्मॉल कैप या लार्ज कैप फंड में ऐसा हो सकता है कि कभी कोई कैटेगरी ज़्यादा अच्छा नहीं करे तो उसका परफॉर्मेंस शायद थोड़ा धीमा पड़ जाए, हल्का हो जाए. लेकिन मल्टी कैप फंड में एट एनी पॉइंट ऑफ टाइम फंड मैनेजर लार्ज कैप में 25%, मिड कैप में 25% और स्मॉल कैप में 25% निवेश करके रहता है. तो इससे एक काफ़ी अच्छा बैलेंस मिलता है फंड को और ओवर अ लॉन्ग पीरियड ऑफ टाइम काफ़ी उम्मीद रहेगी कि एक अच्छा रिस्क एडजस्टेड रिटर्न मिलेगा इन्वेस्टर्स को.
How do you view the role of active management in the multi-cap strategy, especially during a very volatile and range-bound market?
देखिए, हम लोग जो हैं वी एट ट्रस्ट म्यूचुअल फंड, हम लोग ग्रोथ इन्वेस्टर्स हैं. हम उन कंपनीज़ को आइडेंटिफाई करते हैं जहाँ पे ग्रोथ ज़्यादा है और हम उन्हीं में ट्राई करते हैं इन्वेस्ट करने का, बिकॉज वो ग्रोथ अगर क्रिस्टलाइज हो गया तो कंपनी की वैल्यू काफ़ी बढ़ सकती है. और इंडिया एक ऐसी कंट्री है जहाँ पे बढ़ के कंपनियाँ आगे आ रही हैं, सेक्टर्स उभर के आ रहे हैं और काफ़ी सारी अपॉर्चुनिटीज़ है जिसको हम फाइनेंशियल टर्म्स में कहते हैं अल्फ़ा जनरेशन की, कि नई कंपनियां आएंगी और वो बढ़ेंगी. तो मल्टी कैप में हमें ये फ़ायदा हो रहा है कि हम लार्ज कैप में, स्मॉल कैप में और मिड कैप में तीनों सेक्ट्स में हम ऐसी कंपनियां चूज़ करेंगे कि जिसमें ग्रोथ ज़्यादा हो. सो हमारे हिसाब से तो ये काफ़ी अच्छा इन्वेस्टमेंट है और हमारी जो शैली है, जो स्टाइल है इन्वेस्टमेंट का, उसको भी काफ़ी सूट करती है.
There is often this confusion among retail investors about how long you should hold your stocks and funds. इस बारे में आपको क्या कहना है?
देखिए, वॉरेन बफे जी हैं जो परहैप्स दुनिया के सबसे सफल इन्वेस्टर हैं और वो कहते हैं कि मैं उन कंपनीज़ में इन्वेस्ट करना चाहता हूँ जिसमें मैं कभी पैसा निकालूँ ही ना. तो हमारी भी ऐसी ही उम्मीद है कि हम ऐसे गोरिल्ला कंपनीज इन्वेस्ट करें जो आज से कुछ साल बाद काफ़ी बड़े हो जाएं, काफ़ी रेयर हो जाएं, काफ़ी डोमिनेंट हो जाएं और उनकी जो प्रॉफिट जनरेटिंग कैपेबिलिटी है वो काफ़ी बढ़ जाए. तो हम चाहेंगे हमारे इन्वेस्टर्स भी सेम अप्रोच रखें, एक लंबे अरसे तक इन्वेस्टेड रहें. तो जो सही सवाल का, इस सवाल का सही आंसर है कि आप कभी पैसा ना निकालें, आपका हमेशा ग्रोथ होता रहे. लेकिन टू बी प्रैक्टिकल, मेरे ख्याल से इक्विटी में वही पैसा आना चाहिए जो एक आपको कम से कम 5 साल तक नहीं चाहिए. सो 5 से 7 साल मेरे हिसाब से एक सही अवधि है जिसमें अ पर्सन शुड रिमेन इन्वेस्टेड इन इक्विटी मार्केट्स.
सो पेशेंस इज द की, शायद ये कहना सही होगा. माई लास्ट क्वेश्चन टू यू हियर इज, if you have 30 seconds in an elevator with a potential investor, what's your pitch for investing with Trust Mutual Fund?
देखिए, इंडिया इज़ अ स्ट्रक्चरल ग्रोथ स्टोरी जहाँ पे काफ़ी अल्फा जनरेट हो रहा है, काफ़ी कंपनियाँ उभर के आ रही हैं. यू रिक्वायर टू इन्वेस्ट विद फंड मैनेजर्स जो बिलीव करते हैं इंडिया की स्ट्रक्चरल स्टोरी को, जिनको एक्सपीरियंस है इंडिया की ग्रोथ स्टोरी में पार्टिसिपेट करने का, जिनमें वो ऐसी जज्बा है और लगन है कि वो नई कंपनियों से मिले, उनको एनालाइज करें और अपने पोर्टफोलियो में डालें जिससे आपको फ़ायदा हो. आपका सही पार्टनर ट्रस्ट म्यूचुअल फंड और ट्रस्ट म्यूचुअल फंड में ट्रस्ट एमएफ मल्टी कैप फंड.
Thank you so much for your time, and I'm sure these small tips and tricks that you've given are going to be extremely useful for all those watching you right now. Any last words that you would want to say?
I would only say, Alisha, that as a young person who's earning money, you should also invest in trust mutual fund schemes, and you should remain invested for a long period of time. And this is the way you will not only beat inflation, you will also do well over a long period of time. So start investing and happy investing.
Thank you so much. Pleasure having you here today. Thank
Okay,
you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.